does take us to our talk of the tape, the road ahead for stocks. Let's welcome in Schwab's chief investment strategist, Liz Ann Sonders. Nice to see you.
Nice to see you, too. Welcome again to Impact.
It's good to be here, as always. Let's talk markets, okay? Your outlook is pretty good, at least in the near term, which you say the momentum still favors the bulls, correct?
It does, and momentum as an actual factor has been dominating. And the good news is I get a lot of questions about, doesn't this alarm you? Because the last time momentum was this dominating as a factor was in the late 1990s. But the fundamental factors most highly correlated to momentum now are things like strong balance sheet and strong free cash flow, versus in the late 90s, the factor most correlated to momentum was negative earnings. I do worry a bit about the sentiment backdrop. I think there's a little bit of frothiness. In and of itself, that doesn't suggest a problem, but it does mean that if there's some sort of negative catalyst, the pain can be a little bit more severe. So I'd put that sentiment in the risk.
It's funny you say that, because it's picking up a little bit of steam. Chris Ferrone, who comes on our program often from Strategas, says equity flow starting to bubble.
Yep.
One of the tactical risks we see percolating for early 2025 is sentiment. I mean, there's a reason why sentiment is positive, and there's a reason maybe why sentiment has grown more positive since the election result. Do you feel that, and is that justified? And have you changed in any way your view of the markets for the new year as a result of the election?
So I think what's been characteristic of this market that goes beyond the election, because it started back in mid-July, is we're in a backdrop now of much more fierce sector rotations in a relatively condensed period of time. So measured by things like sector dispersion is really kicking into high gear. I think that's likely to continue. And I think increasingly as we get to inauguration and thereafter, a lot of that will be policy-driven, tariff-driven. So I think it's going to be a tricky environment to try to trade around sectors. I think there'll be more sort of common threads at the factor level than at the sector level.
Cyclicals over defensives. In other words, I mean, the things that have been working are going to continue to work. That's your view?
Well, yeah, I think momentum will continue to do well, but the rotations at times since mid-July, when this really started, have at times been into the more traditional defensive areas. You got a day like today where healthcare is at the top of the leaderboard from a sector perspective.
Yeah.
So I think we will have these fierce sector rotations that at times we'll have money heading back and interest back into the Mag 7, the mega cap names, but at times based on maybe skittishness in terms of an uncertain outlook with regard to policy, you might see some money snuggling more toward those classic defensive areas. So it's not really a broadening out in a traditional sense, because it's these fierce whipsaw rotations, and I think that continues to be the name of the game, certainly in the first half of next year.
Do you think Nvidia tonight, without talking about Nvidia as a specific stock, does it have the potential to either lead us back into the mega caps in a larger way, or underscore exactly what you're talking about, the dispersion that's taken place and a movement back to more economically sensitive areas, industrials, financials, and things like that?
I think, a stock like Nvidia, its earnings can always be make or break. That's just the nature of the popularity. But it's not just Nvidia now. You're seeing huge action in MicroStrategy, and Palantir is actually performing better. So it is still that AI story. And I think if we can kind of keep the momentum in the numbers, that supports that theme within markets, because demand outside of AI and tech is not great. So it really is an AI story, and you have the bellwethers that either allow that to persist or maybe throw a wrinkle in. I don't have an opinion on what Nvidia is going to report. I don't cover the stock.
Sure.
But I think in terms of the traditional cyclicals, or maybe the ability for manufacturing to rebound, I think that's at the mercy of uncertainty with regard to tariff policy. And obviously we're not going to get that cleared up until at least the start post-inauguration. And we have to remember that in 2018, the goal, obviously, of tariffs is to boost domestic manufacturing. But using the ISM Manufacturing Index as a proxy, once the trade war started, ISM Manufacturing Index cratered. Now we're in sort of this lull in manufacturing at a low level, so maybe you don't crater from here, but it's hard to envision a lift in advance of knowing what tariff policy is going to be. And I would apply that to things like capital spending, too. There's just a pause businesses are probably going to pull. They have been pulling back on CapEx, on M&A activity, and we don't clear up that uncertainty for a couple of months.